Piper with the weekend video clip, and it's Saturday the 10th of September. And we're looking here at a chart of the DAX. DAX peaked last year around March, April. ABC decline. Since that low here, early on in the year, we have seen an A, B, C rally. Important peak there. And now the action since here. So let's go into that. Right now, this could be a complete A wave, complete B wave, and a big C wave decline could be the next thing on the plate. This recent decline now looks a little more serious, so let's have a look at that in more detail. Okay, so the peak came in here, just above 10.8. No real form of decline. It was fairly sharp. This looks pretty corrective really, but again, no real clear pattern. The summer period hasn't really helped very much. We've now seen a failure here, below the previous high, and now a pretty sharp pullback, so it depends how that develops really. Clearly got support levels around 104.30, down below 104, so we'll see what kind of rally develops next week before making any indications here. I'm still got an open mind really. There's just nothing here that's really that indicative of a major decline. As I say, this of course changes things slightly, but it could easily just be an ABC decline, which would be quite positive for the market in fact, and then a strongish rally. But we'll have to wait and see how this develops. Right, the peak came in China, again April, May, maybe a bit later, 2015, great big decline. You can see actually a bit of price control coming in here, this little sideways action which was pretty much fitted in with the actual peaks we then saw. I count this as a 2 wave, that as a 1 wave of 3. We now have this ABC form to there, 3, 4. These aren't the same as RG, these are FXM price I believe, but not quite the same, but the patterns aren't the same on the charts. So we've now got a pullback and a sideways drift. In fact, let's go and have a look at that more detail. Okay, in itself it's not a huge amount to base a massive sell on, but we have got this sell-off, we have got the ABC, with this being the final part of the C, we have got this drift here, so any break down below this level here, which would be below 3, I said the RG price is slightly different, would lead to a signal that we could then start to actually see it starting to move down, which is what we may be seeing in the DAX as well, but we just need confirmation, as we do here of course. Looking at the Dow, we again had this big peak earlier in 2015, A, B, C, followed by a 1, 2, 3, 4, 5, went to there. Now we've got the sell-off come in, which is what I've been talking about. Let's go look at it more. It's a daily chart, so again we can see 5 waves up, 1, 2, 3, 4, 5. It's all been rather dithery, again rather like the DAX. But suddenly, of course, it's changed a bit. We have got some fairly fast action, taking out the low here. We've got a clear indication of a peak up and into the, as per the wave pattern, into that peak. So this could be something of some importance. Now, if we look at the currency, this is the euro dollar. Saw this big fall in 2014. All that's been achieved so far is a really almost a triangular type formation. But looks pretty corrective, suggesting that maybe the next move is going to be to the downside, down to parity. So that's possibly one thing that's worrying markets. Currencies often destabilise the world they live in, as it were, at some point in time. Pound dollar looks similar. We saw this Brexit decline, obviously, just gone sideways really since then. Bit of a move up here, but it seems well failed at this resistance. Also the main trend is clearly down as far as pound dollar is concerned. So dollar still looks good. On to gold, also a negative week in the context of the longer term chart, starting from the rally at the beginning of the year. 1, 2, 1, A, B, C, 2. So the key level is $1,300. Break of that would certainly be of some concern, suggesting that we could even test 1,200 in fact. So let's check the shorter term action. This is a daily chart. I guess the wave count here is a 1, 2, 3, sort of triangular fourth type thing, and then a fifth, quite an extended fifth wave. So we're now testing the fourth wave resistance between 1325, 1316. So a break below that level would certainly be a worry, and below there we could fall a lot further. So well, wave pattern, that's a lower high, ABC, B, 1, 2, 3. So I guess a 4 and a 5 could come in, test this level down here. Quite a big fall. As long as it remains corrective, i.e. a 1 and a 2, it still counts as a 3. It looks like it wants to take as few passengers as possible, trying to shake everybody out at the moment. Alright, similar action on silver. We have the wave 1 to there, 2, then a 1, 2, well, 3 maybe. So this could be a fourth wave. But basically the same situation here with a decent rally now being retested. So let's have a look at that in a bit more detail. Well, this is pretty impulsive, but the key level is down here, 1835. Clearly, if that happened, then you get a much more negative picture. Let's go back to the daily. I guess you can count this rally here as an A, B, C, B wave, C wave, roughly equivalent lengths, I think about 4.5. There's no 5s here, which is encouraging to an extent. Clear ABC, that's gone way beyond any lows here. So there are definite positives, but the market will do as it wishes to do, and right now it's looking a bit negative. Okay, that's all for today. If you found that interesting and useful, back to report on Tuesday morning for subscribers. Have a great weekend, thanks for listening, and bye for now.